LTNC Q2 earnings report, Labor Smart Inc. Okay, obviously, we've been following this company for years now, and I want to get the positives out the way first because there are some notable positives of what's happening with this company, and which makes me excited. And then we'll get into the other things that the company has to work on. But the positive is, which is a big positive, is Labor Smart Inc. after all this time is finally making gross profit on their operations. We are now operating at a positive margin. And since I've been in the company, this is the first time I've seen this, right? It's the first time where operations where we can see on paper that the business is making more money operationally than what they are spending in expenses. Now, this doesn't include long-term debts. Doesn't include any like derivatives or share dilution. But when we talk about pure distribution, manufacturing, beverage curation, this is the first time in history for LTNC since I've been invested where we made more than we spent. And so that's a solid positive, right? And so let's just look at what some of the numbers real quick. Obviously, so for Q1 2025, so for Q1, the gross profit margin was 1.19%, right? So what we made gross profit was $39,000, almost $40,000. And so when you divide that by the overarching revenue, right? The overarching revenue, the sales, that has a margin of 1.19%. Now, when we get to Q2, this is where that inflection point reached, right? This is when a lot of things finally started to come in play for the company. The gross profit margin went from 1.19% to 45.1%. So that is, almost a 45x in percentage points of where we were. And so when we look at for the month ended in June 30, 2025, right? So we had a total income of $4,234,395, right? Our cost of sales was $2 million. My bad. So our total revenue for the quarter was $4,234,395. And then our cost of sales was $2,322,924. So you see that's a positive income right there. And so we had a gross profit of $1.9 million, which is almost $2 million, which comes out to be 45.1%. And now in most cases, when you just Google what's a good profit margin, it's really in between 50 to 70%. So, we're a little below, I guess you say below average or below the good threshold for gross profit margin but for the very first month of having this such of inflection point, I think it's a positive sign. I mean, we were positive in Q1, but we definitely ramped it up in Q2 nicely, which is really nice to see. So I want to get that out the way. This is positive for investors. At this point in the game, this is why we brought in Illumination. This is why we brought in Brad and Scott and their team to get this situated, right? So that's the first step. When it comes to some gematria, we have some positive things with that as well. A gross profit margin increase that equals 137 in reduction, which is the 33rd prime. Obviously, we've been talking about that for years, so you want to see that. And that spans all investments too. If your company that you're invested in has an increasing gross profit margin, you already know the gematria, it's positive, right? We also have the gross profit margin rising equals 333 in English ordinal, 153 in reduction, and 153 reverse reduction. So to see those two together, I've done videos on the 333 and 153 combination, the triangulation, and the Pisces with 153. So if you haven't watched any of my previous videos of me breaking down the gematria and me looking at the numbers, at why I look at the numbers I look at, I would do so. So the gross profit margin rising equaling 333 English ordinal, that's very powerful. That's very energetic. And that's what you want to see with your companies, right? Obviously, you don't need the gematria to understand that's good, but to see the gematria back it up, it's just back testing the importance of it, right? So that is, I wanted to start off today to say that is very positive for LTNC. Obviously, so let's get into a little bit of some criticism. Obviously, there's always people in the community that I feel like that are over bullish sometimes or over bearish. And for me, I try to stay steady Eddie in the middle. I try to hold people accountable. I try to hold myself accountable, and I'm holding other shareholders accountable in management as well. So there was a couple things that I wanted to bring up that not many people were happy about, or they should have handled it a different way. So when the earnings report came out, and I guess I should just bring it up to show you that I'm not crazy, is the company, once again, I mean, they tried to just slip it in here without bringing too much into it. So I'm gonna bring it up for you guys to see. So this is Labor Smart Inc.'s quarterly report, but I want to go to the bottom, or to the bottom of where they bring it up. Where is it? Trying to bring it up. Okay, subsequent events. Okay, so this, I want to bring up the subsequent events, right? So we were under the impression that Adios was supposed to launch on August 15th of this month. Lo and behold, the launch date got pushed back, and this is what it says at the very bottom of the earnings report. We don't even get an official, tweet about it. They tweet about everything else, but we don't get an official tweet about this. It says the August 15th launch date, due to flavor perfection and coordinated efforts of distributors handling the launch alongside LTNC and cookies, the launch window could extend up to 30 days beyond the August 15th projected date. So essentially what they're saying is they missed the mark on the launch date and is getting pushed back to sometime in September. We don't know when in September, but it's getting pushed back. Now, in relation with that, on August 15th, it just wasn't the missed launch date. It was also Brad and Scott selling to each of their preferred shares. I think it was like 200 million shares, right? It was 200 million shares, and they have, I think, like 9 each or something like that. And I don't want to, they are allowed to get paid. I don't mind Brad, Scott, and people needing to get paid, but I think I can make a small criticism on the timing. They went on to sell their preferred shares, which, I mean, yeah, they're due and owed. And then when you look at the timing, it was for their year of service. But as a leader, once again, is it so unreasonable to say, hey, look, we push back the launch date. People are waiting for the launch date. And so we don't get any news about this. And besides the end, the bottom of the earnings report, maybe me and Scott push back us selling our preferred shares until the launch of Adios, because when you really think about it, this is going to be their flagship product to really make themselves known and to really truly show they can do the job, right? And so my minor criticism into it is, if you're not going to meet the deadline to what you guys have put, don't continue to put your preferred shares into the mix. Just wait, right? And so that's my criticism there. I'm not saying they can't get paid, but there's gamesmanship to this, right? To the penny stock world, OTC in the stock market. And I feel like the company still is losing the gamesmanship battle, because as a shareholder, you're not meeting your own marks, but you're still, taking your cut. I think that's not a good way to go about it. Obviously, we've talked about the positives, but that's something that I feel like should be addressed. What else? So in regards to LTC, there was a couple other things I wanted to bring up as well. We sold Go Fast to Golden Triangle, which I'm gonna bring up that article right now because it's important. It's important to understand what that means. So let me share my screen once again, present something else. Chrome tab. Let me see. Let me bring this up over here. Share this tab. All right. We're going to share this. We're going to go over to Labor Smart Inc. and look at a couple of the articles. All right. So there's a couple moving pieces that landed this deal, right? So one, Javier iTrades, or however you remember him by, he was kind of like the marketing president director of Next Gen Beverages, LTNC. He does not work for LTNC anymore. He transferred over, is now CEO of Golden Triangle Ventures, which is another OTC company. Now, with this is where some of the details come in play. Labor Smart Inc. retires 720 million shares to Treasury and secures strategic Go Fast Sports agreement. Today announced an immediate retirement of 720 million shares to its treasury as part of strategic transaction involving Go Fast Sports brand. This action represents the largest share reduction in company history and underscores LTNC's commitment to strengthening its capital structure and responding to shareholder concerns, positioning the company for long-term growth. A part of the deal, it's a 3-year license to market and sell Go Fast beverages with 25% of gross profits payable to GTVH, Golden Triangle. So essentially it is, we have a 3-year license. If we want to sell Go Fast ourselves as Labor Smart Inc., we can for 3 years, and we retain 75% of the profits. We have to give a fourth to Golden Triangle. We have exclusive manufacturing rights through LTNC's manufacturing division. So moving forward, Javier, they've dealt with, if Go Fast wants to continue to re-up with manufacturing, if they're selling well, they have to re-up with us, which means we get paid to manufacture. A mutual non-compete and distribution agreement to protect the strategic interests of both companies. So really, as an LTNC shareholder, I wouldn't expect much sales or at all from our side for selling Go Fast. I mean, I guess it's nice having a 3-year license, but where the company's going with Adios and a couple other products, I don't see them putting any effort in themselves selling Go Fast. So the money we get from this is going to be what Golden Triangle and Javier can sell. Just wanted to outline that to make it a little bit easier for people to digest. What else? Adios, we talked about, is already pushed back. And they had another PR on the 19th. Labor Smart Inc. retires 717 million common shares and 20 preferred H shares. Today announced the retirement of approximately 717 million common shares and 20 preferred H shares to Treasury. This action, once again, is a big action. In addition to the share retirement, the company has eliminated more than $2.3 million in legacy obligations by retiring prior debt instruments, promissory notes, and private placement Miranda, consolidating them into a single convertible note. So this is good. You know, we are consolidating debts. We're consolidating our instruments we're using. So it's going to be less derivative based. Let's see. So that's good there. I wanted to bring that up. This is their share structure reform and road ahead. Reduce that outstanding share count and dilution, which again, every time they reduce the share count, there's more that comes online. So we're kind of running in place with that dilution wise. Retire and consolidate legacy obligations. That also to bring up that the James DePaletto lawsuit is kind of coming to a head a little bit. It still has not been settled. And with the company finally bringing in some operational profit, some operational positive margin, let's just get on a payment plan and pay this guy off. Just pay the $2 million back and let's move on. Let's stop paying legal expenses. The company felt that they would be able to beat it, but the judge isn't really, from what I've seen from the filings, the judge is going to let it play out. And in my opinion, I believe James DePaletto is due his money. He was bamboozled, even though Jason wasn't authorized as a person to make a deal like that and to give power to James with the money. So what happened was Jason added James on with the money, thinking that would give him controlling interest, but it didn't, because Jason tried to circumvent the actual process in place of the company when Joe technically was still making supposed to make those decisions. So James is bamboozled by Jason. So he is due his money that he is owed because it does fall under our ticker. But he is not he does not have any ownership power or decision-making responsibilities, which was kind of what was going to happen. Is he comes in, he makes investment that would give him controlling interest. They're going to sack the company and try to sell the gamer shot and get what they get back. We don't have to worry about that because Tom never went through the process of because Tom was the kind of the very first note holder, and the process was him and Joe. It never was him and Jason. They never put that process in place. So by law, James is only owed his money. He's not owed the company. Just pay the man on his payment plan and let's move on, please. What else? So that's pretty much it on LTNC. Price wise, that's the LTNC. Yeah, we're at 0009. I mean, since the news, we really haven't moved a whole bunch, to be honest. So hopefully, you know, they just keep chugging along operationally and get this squared away. They still got a lot to do gamesmanship wise. There's still a lot to be desired in that aspect, but there are some pros going on with Labor Smart Inc. in the company, and along those lines. Let's see. So that's pretty much what I have for LTNC today. It was pretty quick. Make sure you check out my other videos on LTNC just in the playlist. I have over 20, maybe 30, even close to 40 videos spanning years to really understand the journey. And so definitely take a look at that. And we'll just keep monitoring it as we move forward. Adios is supposed to launch in September. They're supposed to be in retail at that point too, with different variety packs. So we'll just keep our ear to the ground as updates move along.